Assalamualaikum warahmatullahi wabarakatuh. So today our group will present about financial ratio. So our group had chose Parkson holding Berhad, and our group had calculate the financial ratios for this company. So introduction to financial ratio. Financial ratio analysis is a useful technique to measure, compare and evaluate the financial condition and performance of a company. Ratio analysis enables a credit manager to spot trends in a company's financial performance and to compare its performance and financial condition with the average performance of similar businesses in the same industry. So, first ratio is liquidity ratio. So, what is liquidity ratio? Liquidity ratio is financial ratio that indicates whether a company current assets will be sufficient to meet the company's obligations or debts when they become due. Example of liquidity ratio is current ratio, quick ratio, and net working capital ratio. Based on the chart above, we can see that current ratio for Parkson holding Berhad is the lowest in 2017, which is 88%, and the highest current ratio is in 2019, which is RM 1 ringgit and 32 cent. So next, quick ratio. Quick ratio measures the ability of the company to pay its short-term loans quickly and minus its inventories and prepayment. So based on the chart, we can see that quick ratio is the lowest in 2017, which is 0.8, and it is below 1. So the company cannot pay their debt immediately, but on the other years, this company can pay their debt instantly because the quick ratio is above 1. Lastly, for liquidity ratio is net working capital ratio. Positive amount of net working capital ratio means that the company has enough current asset to meet this current liability. So based on the chart, only in 2017 the amount is negative, and on the other years the amount is all positive. So basically, it means that Parkson Holding Berhad Company still have balance to continue its operation in each year except for year 2017, because in 2017 they have negative amount of net working capital ratio.
So I will talk about efficiency ratios. Parkson Holdings Berhad shows that their efficiency position is not quite outstanding from year 2015 to 2019. Firstly, as we can see that in the receivable turnover, they maintained in collecting their debts from customers in early years, especially in 2015, at 27.79 times, and in the year 2017 at 29.73 times, but it started to decrease repeatedly for the next 2 years at 25.36 times in year 2018 and 23.08 in year 2019. It indicates that the company is having difficulty in collecting from its customers, or it is being too generous with granting credit. But for the average collection period, it is still in a satisfactory performance as they manage to collect debts every year, especially in year 2017, which is the lowest at 12.28 days, and only a slightly difference in 2019, which is the highest at 15.81 days. And then Parkson Holdings also facing lower inventory turnover ratio that indicates their company is not managing its inventory well. We can see that in the year 2016 at 2.79 times, which is the lowest, and having a slightly increased to 5.03 times only in year 2019. It may be overstocking, or it might have an issue with sales. Pretty much similar for the asset turnover ratio, which are still in lower performance, even though it keep on increasing from year 2015 at 0.38 times to 0.47 times in year 2019, but it indicates a slightly difference from year to year. This shows that the company is failing to efficiently employ its asset to generate sales.
Next, we move to the Parkson profitability ratio. As we can see, this is the profit margin graph. According to the chart, we can conclude that during 2018, the company profit margin has very high net loss for every ringgit of sales. Next is the return of asset for company Parkson Holding Berhad. In this chart, the company ROA show that they have a very low bad return in 2018 for every ringgit Parkson invests in their asset. In the return on equity for company Parkson Holding Berhad, the ROE show that the company has very low bad ROE in 2016. This means the company cannot reward the shareholders with good return.
The financial debt ratio in years 2015 show 57.73%. It is meaning that the asset company able to pay liability company, while in year 2016 the company percent ratio is 58.51%, increase about 0.78%. It means Parkson Berhad Holding affordable to cover their liability. At year 2017, the debt ratio also increased to 60.55%, and year 2018 decreased to 56.68%. The company had problem to pay debt in year 2018, but still afford to cover the finance. The debt to equity ratio in year 2015, the company able 1.37 times to pay their liabilities. However, in year 2016, increased to 1.41 times at the years. It means equity less to able pay the debt of company. In year 2017, also increased to 1.54 times. That means one offering equity able to settle the debt around 1.54 ringgit. Next, in year 2018, the ratio show decreased to 1.48 times. The company able to cover their debt in short time more better than last year. The table times interest and ratio from 2015 until 2019. We look the company have problem or not to able pay their liabilities interest. At years 2015, we look that the company percent is 0.59%. We look that the company able to pay the interest. But in 2016, have the problem at their company, we look that the percent is negative 0.77%. It means they have lost profit at the years. But in years 2017, the percent increased to 1.92%. It means they can able to pay the interest. But the years 2018 and 2019, we look at the percent get negative again because the company have get the lost profit at the 2 years. But in the years 2019, we look at the more better the company able to interest their liabilities earned.
Market value ratio. Market value ratio are used to evaluate the current share price of a publicly held company stock. These ratios are employed by current and potential investors to determine whether a company share are overpriced or underpriced. The market value ratio of Parkson Holding Berhad is getting worse from years 2015 to 2019. It clearly seen in the above chart and table, showing the earning per share for 2015 is 4.42 cent and getting worse from years to years and reach negative 12.11 cent in 2019. Earning per share are the net earning of the company earned on one share. Higher the EPS, the better is the performance and prospect of the company. Parkson Holding Berhad can increase the EPS if that they earn more or if they expand their margin by lowering costs. They can also utilize share buybacks. This means that they lower the amount of share that can be bought without making any alteration to profits. Next is dividend payout ratio. Based on dividend payout ratio, in years 2015, company paying out the dividend is negative 695.28% and getting better from years by years and reached negative 4.58% 2018 and slightly increased in 2019 which is negative 20.09%. However, dividend payout ratio getting better is still in negative value. This is not a good sign because negative ratio show that a company is paying out a dividend while losing money. Price earning ratio. Based on chart and table price earning ratio showing that price earning ratio for 2015 is 2.04 cent and getting worse from years to years which is showing negative value price earning ratio and reach negative 0.74 cent in 2019. A negative price earning ratio means the company has negative earning or is losing money. Even the most established company experience down period which may be due to environmental factors that are out of the company's control. However, companies that consistently show a negative price earning ratio are not generating sufficient profit and run the risk of bankruptcy.
Should I invest in the company? I will say no because of the negative profit margin for this company. Company that can maintain steady profit margin show the company can effectively control its operating costs, but the Parkson profit margin show that their revenue cannot control their costs in production. Next, we need to look at the debt to equity. If the company returns are higher than its interest cost, the debt will enhance value. However, if it's not, shareholders will lose. The last is our aim of investment is the return. The return on equity helps investor to compare the profitability of company. But Parkson company show us a negative ratio in return on equity. It convinces us to not take risk for invest in this company.